Hi, this is Randy Woodruff with Suncoast CPA Group, and we're back for part 2 in a series of 8 of common questions and issues that get asked by clients when they're starting up a new business or in an ongoing business. And one of the things we hear quite a bit is, do I need a separate checking account for my business? And I highly recommend that if you have a business, that you definitely get a separate checking account for that. And you need to get an EIN number. So if you're setting up an LLC or a corporation, you definitely need to get an EIN to do that. Or if you're going to just run it as a proprietorship with no other entity structure, still get an EIN and give that to your bank to open up the account with. The reason I recommend this is for multiple reasons, but the main reason is, I've worked with clients over the years and they've got, they're using their personal account, they're using their business account, they're using their personal credit cards and business credit cards, all different kinds of things. And then come the end of the year, do their taxes, they're pulling information from all over the place, trying to, sort and separate what's business, what's personal. And more than likely, you're going to end up forgetting expenses or deducting expenses that aren't actually business expenses. But also, more importantly, when it comes to time for an audit, we've all heard, the IRS is in the process of hiring 87,000 new IRS agents. That's a big number of agents, and so more than likely, audits are going to go up. So with that being said, if you have a business, you're more than likely going to be facing greater audit risks in the future. So it's more important than ever that you have all of your income, all your expenses collected in one checking account. That's for the business only. If you are running expenses and or income through multiple accounts, and then some of those accounts being your personal accounts, you're going to have the IRS now up in your personal business as well, and you probably don't want that. So 2 reasons. 1, to make sure you're properly tracking your income and expenses, you're recording them, you're picking them up. And 2, in the unlikely event and unfortunate event that you are audited, you want to make sure that the IRS is looking at one set of I'll say, financial documents. The business account, the business bank statement, the business credit card. Highly recommend doing this. If you have multiple businesses, same thing. Have a separate checking account for each business, and try to make sure that you have debit cards and or credit cards that tie back to that separate business, and make sure you're properly running those expenses through there. It will make your life a whole lot easier, I promise. And hopefully you're never audited, but if you will, it'll make that audit go a lot smoother. Remember, if the IRS does come out and audit you, they're not there to help you. So if you don't do a very good job, making it easy for them to understand where your income and expenses are at, what they are, and for them to follow, you may have a much more difficult time in the audit. It may take a lot longer, and you may have a less favorable outcome. So if you have any questions about that, please come see us here at Suncoast CPA Group. Give us a call at 352-596-2883, or on the web, our website. Go there, make an appointment, suncoastcpagroup.com. Again, this is Randy Woodruff, Suncoast CPA Group. Thank you for watching.